Hello, everyone. Welcome back to the next Dakota Research interview. Today we have an expert in the energy space, Bluewater Energy, Frazer Blyth. Frazer, thank you for joining us today.
No problem at all. Glad to be here.
Bluewater is an established GP investing globally across the energy supply chain. The firm has a strong track record of over 14 years of investing in energy and the adjacent sectors. Frazer Blyth leads the marketing and investor relations functions at Bluewater and is part of the senior management team in the firm. Frazer is also a member of the Responsible Investing and Charitable Giving Committees. Prior to Bluewater, Frazer spent most of his working career in senior marketing roles, however, started his professional career as an engineer. As a consultant, he has worked with many of the UK corporate banks, advising on business, internationalization, and marketing strategy. Frazer, thank you so much for being here in Philadelphia. You traveled a lot this week, so I'm excited to have you here in the studio.
Great. Listen, thanks for the invitation. Look forward to having a conversation and learning a bit more about what you guys have been doing, really.
Absolutely. So Bluewater Energy, really interesting firm. We're going to get into a lot of different discussions around sort of the energy supply chain infrastructure, but love to just get into your backgrounds, what brought you to private equity, just a little more information for our listeners to understand, what brought you to the industry.
Yeah, okay, good question, actually. Way back in time, I graduated as an engineer, a mechanical engineer, and literally I lasted 2 years and I hated it. So quickly moved into marketing, did a lot of consultancy with some of the big banks, some of the big institutions around about the UK, some big private businesses. And somebody I knew was setting up a private equity firm with somebody that I kind of knew. And they said, hey, we need some help on all the other stuff other than just, setting up the firm. So wrote the first pitch book for Bluewater, wrote the second pitch book, developed the brand, got involved as a consultant early on, just got more and more and more responsibility as time went on. So hence 2016 came on full time and never looked back.
And Bluewater's been around for
2011.
Okay.
The three initial partners set up the firm then. The first fund really got kicked off in 2012 and we raised it in 2013.
Okay. Now, in your own words, how would you describe Bluewater's investment strategy?
We're energy guys. First two funds we've invested in very traditional energy type businesses, but every business we've always tried to nudge into international markets, move into different sectors, not just stay in energy. Where we are now is all that experience, the commodity cycle is changing, energy is less volatile than it used to be. Nobody's now looking at the oil price only.
Right.
So what we've done is we've said, where's our best success been? And our success has been in the supply chain of energy. Companies that do industrials, manufacturing, critical components, specialist services that all started in the industry, the energy industry. We focused on that area, and that's where the Fund 3 is getting launched on.
Excellent. So energy supply chain rather than direct energy production.
Yeah, moved away from the commodity.
Right.
If you're attached to a single commodity such as oil and gas or nuclear or solar, okay, you kind of have all your eggs in one basket, dare I say. So we've moved the layer below now in supply chain. So a lot of our companies work in traditional energy, in wind, in solar, in nuclear. So we're in the layer below.
Got it. Okay. And so there's a lot of different themes and we'll get into it too,
sure.
Cross currents. I know there's 4 that you're focused on today, but just kind of taking a step back, just the energy landscape. We talked about the investment strategy at a high level, but just the energy landscape today. You're based in London. You have global investor base. Just talk to us about sort of the environment today in the energy markets.
I'm going to go back 3 years. Nobody wanted to touch energy. Some of our investors who invested in 2017 haven't made an energy investment since. So the world wasn't sure about energy. We all wanted to go greener overnight. Couldn't happen. Prices went through the roof. Availability of green energy is scarce. So fast forward to now, what the world seems to have realized is that while we don't want the traditional oil and gas, we need it. And we need it for the next 20 or 30 years. Now, while that slowly diminishes out, it has to be the baseline of energy supply. Energy demand globally is still increasing. So what companies that are successful are the ones that are trying to take existing companies and make them greener, okay? And that's what we do. Listen, we still need a lot on the VC side. A lot of new technology needs to come through and enable the green market, okay? But meanwhile, there's a huge gap of cleaning up the current energy market, and there's some really good opportunities there.
Can we talk about the investment strategies, 4 strategic pillars that are
sure.
guiding your investments? And love to just get into those. We can kind of break those down a little bit too, just to kind of put a finer point to this.
So again, looking back on our first 2 funds, what have we done well? Where have we made some good returns? And then where is the market? What do people want? They want clean, reliable, low cost energy on the doorstep. But we all want to be a little bit greener too. So what we've focused on is 4 pillars that underpin our whole strategy. First one being efficiency. This actually goes back to my engineering days. If you can make a system, a component more efficient, you're using less energy to get the same result out. That's a good thing. So improving efficiency. The second thing we look at is decarbonization. If you again have a system or a component that can be upgraded, made with a different material, put in a system a different way, you can make the system more efficient. You can make the system emit less carbon. That's what we want. So big focus on efficiency and decarbonization. These 2 kind of go hand in hand. Our third pillar is data and digitalization. In the energy market today, there's so much data flying around. There used to be about a couple of years ago, there was a statistic that came out saying in the energy market, there's more data available in any other market, but energy uses data least. But where we are now, we've all got apps on our phones that control our central heating at home, put our garden lights on and all this, and our Teslas and all that sort of stuff. There's so much data flying around now. If we use data smarter, we can improve efficiency and lower carbon because you're making more real-time decisions. So we see a real opportunity there. And our 4th pillar is energy security. This is always our little bit of kind of energy infrastructure. In the past, we've done some big storage facilities around the world. Used to be down in Savannah. In the US, we have a very good CNG import facility in Port Klang in Malaysia. As we all want cleaner, more reliable, distributed energy, there's some really good opportunities with new energy storage. I call it new energy. So whether that is that gas, is it LNG, or is it even some electrification type storage and distribution, there's an opportunity there. So that's our 4 pillars.
There's a tremendous amount of growth interest. There's a lot of cross currents going on globally too, because you're global investors. So each market's different, and how you're approaching it is very nuanced too, is what I understand. From an approach perspective, your investment approach focused on buyouts and growth equity transactions. Can we talk a little bit further about that and the types of return profiles that you're seeking from these investments?
Yeah, sure. We're classically buyout. We've only done 2 or 3 deals in the past where we've been a 50-50. So it's generally majority shareholder buyout, but we're buyout with growth. Our current portfolio over the 2 funds has reached 25 companies, less than that now as we're selling them off. But for these 25 companies, we as a business have made over 85 transactions.
Wow, okay.
So big M&A focus. So when we're buying a business, it's a platform, and we're adding to it all the time. And one of the things we do is we internationalize. This is hugely important.
Expand out of just...
Yeah. You got a great business out of the UK, you expand it into the USA, you then expand the sales down to the Middle East. We've done manufacturing in India several times. So again, suddenly you've got a business that has a far broader platform in an international market. Makes a stronger return. Our target returns, we're 2.5, 3 times gross money for investors.
Okay.
That's where we see the market just now with some great opportunities.
And are these sort of longer dated assets, or just it depends on the specific transaction or investment? In terms of hold period, in terms of as you're we'll get into value creation, but I'm just thinking about kind of investment hold period, if it's 3 to 5 years, or if it's more of the longer dated assets, like 10 years plus.
No, I think if you look at our first 2 funds, it's been longer, but I think that's due to 2 down cycles in energy and then that COVID pandemic that hit us all and really pushed everything back 2 or 3 years. Classic period for us is a hold of sort of 5 years. That's what we aim for. We know we can get good growth within the first 2 or 3 years. So going forward, a 5-year hold should be the norm.
Could we talk a little bit about the M&A market too? You mentioned about add-ons and just today's environment too. Just where are the opportunities you guys are seeing today?
We see opportunities because of our network. Now, everybody says they've got proprietary deal flow and they know everybody. We're about the only energy GP out with the US just now. Okay, we're in the supply chain of all energy. It's quite specific, it's quite unique. But take for one example, we've got a valve business, very successful, called Severn Valves. The deal guys who run that within Bluewater, they genuinely know every other valve business in the world. They know who's doing what. They know who has the best, product for this market, etc. So the M&A activity that we drive ourselves. We've done 4 big corporate carve-outs. Companies we knew were swallowed up by the big corporates maybe 10, 12 years ago, okay? We knew they existed in a listed business. So we've gone in, taken that business out because we knew it was a good business and bolted it to one of our own companies. So these things aren't coming up on auctions, or they're not coming up in books from lawyers or accountants. We're going and finding them.
And because too, I mean, your orientation, you mentioned buying a platform and then adding on a strategic business to that platform too. You might be looking at it completely different than other people in the market and can assign a value accordingly to that. Yeah. Or maybe a strategic would look, or one of the larger integrated players would look at it. So being able to think way differently than...
Yeah. Oh, some of our companies that started in Fund 1, if I was to show you what we started with and where we are now, you wouldn't believe me. We've transformed them so much. And that's something we'll always do. Some of these boundaries have gone out with energy. We have one company in the US that they started marking fuel, bulk fuel marking, okay? That used to be about 60, 70% of their business. Believe it or not, now it's about 30% of their business. They now mark the $100 bill in the US with a secret marker. Okay. They now also mark, you buy a Gucci handbag from Gucci and it's got that fancy label on it with a hologram and all that. They mark some of that stuff as well. This is a business that used to be 70% in bulk fluid marking, and it's diverse. Now that's the most extreme we've got. But we aren't frightened on moving companies into sectors where they'll make more money if they've got good product or service.
Could we talk a little bit about value creation,
the
key levers that you're focused on once you've made an acquisition? And then from there, we'd love to talk about how the team's organized to support pulling those levers.
Good. No, fine. We have 4 levers. We take companies international, okay? And Mason, everybody goes international.
Right.
But to go international properly takes knowledge and experience. You can't just walk into the Middle East, Dubai, Saudi Arabia, and say, hey, we're here, can we set up a business? You need to know how to go about it. You need to know the network. You need to have been on the ground there. So we've done this several times. So we properly take companies to new sectors. We cross borders, and we look at where's the hot areas for this business. So internationalization. The second thing we do is, as I described a minute ago, we take into different industries. So we industrialize. So if it's a great product, let's say in the valve business, in oil and gas, we'll take that product and hopefully try and get it into the nuclear business, okay, into the infrastructure side of things. So moving product across sectors is really important too. And the other 2 things we do are we're buy and build. That's our strategy. We'll always have M&A, we'll always do more transactions, and some of these can be game changing. Mm-hmm. If you find something really valuable, as I say, in a corporate, and you carve it out, one business, I think we almost trebled our business in size and value overnight by extracting this entity from a corporate and putting them together. So 4 levers keeps it simple.
And from the team, so a global footprint in terms of the portfolio companies that you own today. Yeah. Teams, the headquarters is London, but just how's the team sort of organized to basically support all this?
We travel a lot. We get asked this by investors. I think the coverage we achieve is because our management teams and the portfolio companies are so good. We genuinely work close, hand in hand, shoulder to shoulder with all our management teams, our chairman, our CEOs, our CFOs. So when our deal team is interacting with these guys, it's very much as a partnership and one focused on growth. So that's really it. We have a team of about 15 in the investment team in London, quite a young team. But a good example of what we do is if we've got a young associate coming in, he's maybe been in investment banking all his life, but he wants to get into private equity, he wants to get on the deal side. First thing we do often is send that banker to a business with a factory and a shop floor for 3 months. And we throw them into...
Put their operating hat on.
Yeah. And it allows that person to then build relationships in that firm that are about to manage for Bluewater. It lets them understand what actually makes a firm tick.
And that's something you start right out of the gates there.
We do.
Yeah.
And I think I'm not sure, I think our associates, I think they kind of think, what's going on here? I'm getting thrown into business for 3 months, I should not be London based, but this works for them. It really does work. So that's our approach. As I say, we get on a lot of airplanes.
In terms of the strategy, so after you've fully realized value creation plan, playbook. What sort of does the exit look like? What is a typical exit? We could talk through a couple of case studies too as well through it to put a finer point to it.
Yeah, no, this has changed a lot. All our investments, we're very focused on free cash. So we actually have a target within every investment to get each business to free cash positive within the year.
Okay.
So if you have a business that's international, not just focused on one sector, if it's beginning to throw free cash off every month, every year, okay, then you have a business that's far more attractive from a buyer's point of view than what you might have had done before you bought that business, okay? So strategics are the first kind of port of call. Somebody big in the space, right. Somebody's looking to expand, wanting a high quality business. We do see, however, some of the large funds now interested in our companies. Again, if you've got something that's above 50 million EBITDA, throwing off free cash, that's a good business to go and buy whatever, whether you're just looking for a yield or you're looking for another 5-year term. But a good example we have is our biggest sale to date has been for a company actually headquartered in the Middle East.
No kidding.
They had 10,000 people around the world. It was bought by a strategic in the Middle East, okay? Because the Middle East focus now is to create champion organizations for the world. So they wanted this really high quality business to attach to their successful business. So the Middle East is a good place for us for buyers just now.
I know a couple of key companies. Also, you mentioned Severn in the past. Love to just kind of walk through a case study there.
Yeah, sure. Severn used to be Severn Glocon was the company, old British business. Had about 3 manufacturing plants in Britain, and they make valves, industrial control valves. So not just a valve that's on and off, a valve that's controlled. They can be subsea, they can be nuclear, they can be all different places. Some of them the size of this room, some of them will fit on the desk, okay? So we bought this just pre-COVID.
And these valves go into?
All sorts of systems, factories, anywhere where there's pipes that you need a valve.
Got it.
Okay, but the Severn valves are very they're specialist control valves. High pressure, they're highly corrosive resistant type products. So these things aren't just a few £1,000. These things are hundreds of thousands of pounds, some of them. All right. So we bought this business, and actually our founding partner had been chasing this business for a long time. Post-COVID, what did we do? We wanted to expand the business. We came to the US and bought its biggest competitor, called VTI. Put the two together. Severn, by the way, started off with 3 sectors it sold into. A general kind of catch-all, energy, and I think it was an infra one. So that was 70% of its sales were into oil and gas. We bought VTI in the US. The next thing we did was we then thought, right, we need the big buyer market is the Middle East. So we opened up a JV and sales premises. We had orders in there anyway already, but we really went after the Middle East as a sales focus. We needed more manufacturing. We needed high quality, low cost manufacturing, okay? And we needed to ramp the manufacturing up. So we went to India and we bought this fantastic facility in India. And so we transferred manufacturing from what had been the UK and the US to India. Guess where India supplies to? India supplies to the Middle East, really successfully. So winding up to where we are now, we bought this company. It was about a 9 million EBITDA back in 2018, 2019. We paid roughly 5 times EBITDA for this. Fast forward to now, I think last year the company numbers were about 34 million EBITDA. And one of the guys in the deal team, one of the partners, Salil, has an offer just now for this business at a 10 times multiple. So we've done something right here. Severn now operate in 10 different sectors across the world. So 3 to 10 in the way of sectors, 5 times entry, 10 times exit, and an EBITDA growth of 4 times.
It's interesting too, what you were talking about earlier about the free cash flow too, the buffer, and just the downside protection too, as to kind of give you protection as you go through that year 1, year 2 of the business plan.
Yeah, it really does. We in our whole portfolio, I think to date, our debt to EBITDA ratio is less than 2 across the whole portfolio.
Wow.
Now, could you add a little bit more debt in later in life? You probably could, but again, nobody's been lending in energy. No, the banks don't understand energy, so low debt has been a good discipline for us, and it's something.
Where has financing come from? Has it been non-bank lenders?
A mixture, a real mixture. We've got one smart meter business. It's a data business, and they install smart meters in commercial factories and homes. And they install the meter. They don't own the meter. They install it on behalf of a utility. But what this company does is they collect the data from the meter. In the UK, they collect that data once a day. It's about to go to 24 times a day. So this company is going to have all this data, it data mines